What's up, everybody? It's Big Cheds. How are we doing, folks? Thank you so much. Thank you for hanging out here with me today. This is part of the free version of my third book, Trading Quotes. I have a new book coming out later this year, hopefully in the next couple months, the Trading Journal. That will be out pretty soon. And so now that my fourth book is coming out, I wanted to make the third book free. I wanted to make it so it could get to everybody. And I started a brand new playlist here, Trading Quotes. It's on my YouTube, Cheds Trading. Remember, I am live streaming 3 days a week, the Quick Market Update series. And of course, I'm a founding analyst, Bitcoin Live, where I do a twice a week full market report. I've been doing that for almost 7 years, and I do not skip those updates. So this is great. I'm really excited to do this. What do we have today, folks? We have chapters 3 and 4, weeks 3 and 4. I did weeks 1 and 2. What I'm going to do is I'm going to read through, and if I need to go look at a chart to make a point, I'll do that. Otherwise, we're just going to go through. And we'll start out with week 3 here. So Monday. And by the way, thanks for being here. And, leave me a comment. Let me know what you think. So stay single. Don't marry your bags. And I like this because trading, it's very easy to feel like you figured something out. You figured out some secret sauce. You figured out something that the rest of the market hasn't figured out. And you fall in love with it. And this is supposed to be, the token or the stock, it's at $5. And you think it should be 100. This should be, 500. If everyone really knew, you fall in love with it. And what happens there is you forget to manage your risk. You forget to stick to your stop loss. You forget to sell when you should sell when the trend changes. We need to remember that the market will do us a great favor. The market's going to factor in all of that stuff that's outside of the chart, all the stuff we read in the chat rooms and the news releases, and all these exciting things about the technology, right? The market's going to factor that in. If those things matter, the price will go up. So it's just a little, being fun. Many of my quotes are playful. Stay single. Do not marry your bags. Date them, move on. When things don't work out, move on. Don't marry your bags, right? Protect your risk, protect your bankroll. And Tuesday. So Tuesday. Without proper discipline, a trader is only as good as they are lucky. So, discipline is about many things. Discipline is about not only patiently waiting for a good trade setup, but it is sticking to your plan, whether that be you want to buy much lower, but you're scared when the time comes. You want to be disciplined and stick to your plan when the price gets there. You have a good plan and things get a little bit overheated. You get a little bit overheated emotionally. Discipline is sticking to your plan and staying cool under pressure. Discipline is also important, very important to manage your risk when your idea fails. When you get it wrong, when your idea fails, you have to move on. You need to stay disciplined. And you're only as good as you're lucky. Without that discipline, hey, all you have is luck. You just blind hope. You're throwing a dart. You're hoping it will go up. You've got no method. You have no system. So it's all about, without proper discipline, you're only going to be as good as you are lucky. And this is true in many areas of life, obviously, not just trading. Wednesday. This is a really important one. And these are all important, but a real opportunity, right? It should hit you in the face. The best trading opportunities will jump up and they'll hit you in the face. The harder you have to look, the more likely it is that you're forcing it. You're forcing the action. It should be really obvious to you when the price is at a key level and it's an uptrend, you're testing support. That's a real opportunity. But, if you look at a chart, have you ever had a situation where you look at a chart and you're just not sure? You're like, I'm kind of not sure. Well, then it's not an opportunity, right? The best trades, the best opportunities are obvious. They're going to jump up. They're going to hit you in the face. And you're going to see them at the first glance. So the more you have to look, the harder you have to look, you're probably forcing the action. You're probably feeding your need for action, for volatility, your need to feel a rush, okay? Thursday. This is important. They're all important. Keep in mind, proximity to price with moving average crosses. The further away from the price, the weaker the signal. This is one I'll pull up the chart for. So a moving average cross. If you take a moving average cross, and let's take, for example, we have, let's take a downtrend. So we have, there's our SMA 200, our simple MA 200. And here's maybe our MA 50. And if it comes up and we cross, okay, that's a bullish cross, aka golden cross, right? But if the price is up here already, you have some price distance already baked in. So a lot of times there'll be a moving average cross, but it's lagging. Especially we're talking about an MA 50, right? It's a little bit lagging to the price. It's not like an EMA 8 or something that's exponential moving average short term that's responding to the price. More sensitive to the price. You want to see where the price is in relation to the moving average cross. So I'll try to find a good example for this, and hopefully I find a good example and I don't have to spend too much time looking for one. Okay, a good moving average cross. You want to look for. You know what? I don't want to waste too much time, but the point is, for example, like when you have this moving average cross, you want the price to be nearby it, and that's the whole point. Is when the moving averages are crossing, you want to have the price very close to it for the signal to have meaning. And we obviously understand moving average cross in a sideways market is a muted signal. I don't want to get too far off the lesson here, but this is important. When you see a moving average cross, ideally the price is right there as that moving average is crossing, and then you have the ideal setup for a signal. I've tweeted out a few times moving average basics, and I talk about that there. Of course, Friday, to succeed as a trader, all you really need to know is how to use candlesticks and Bollinger Bands. It's somewhat true, but it is a very powerful tool, the Bollinger Bands. And if you're going to use Japanese candlestick theory, you want to make sure you're using it properly. So there's a thing with Japanese candlestick theory where, if you want a reversal candle, right, you want it to come, after a move down. So let's say I have a hammer candle, okay? Here's my hammer candle, and I want it to come after a move down and ideally at the lower Bollinger Band, reflective of volatility and showing an overextension of the price. So when you use Bollinger Bands, they help you out a lot, right? A bearish reversal candle signal, you want at the upper Bollinger Band, and a bullish candlestick signal like this nice hammer candle here, you want at the lower Bollinger Band. When you get candles in the middle of the channel, they don't really mean as much, especially in the middle of a sideways environment. So these are really powerful tools. If you're going to be a Japanese candlestick trader, you need to marry it with a classical charting technique, the Bollinger Bands, made by John Bollinger. He's got a great book in that too, Bollinger and Bollinger Bands. So these two together are a very good tool. They work very well together, Bollinger Bands and candlesticks. Okay, like a hammer at the middle Bollinger doesn't mean as much as at the lower Bollinger Band. Okay. Saturday, bull markets make geniuses. Bear markets make survivors. What does that mean? I think it's pretty straightforward, but there's times where you can't lose. You play whatever you play, even bad charts, price below a falling MA 200, aka a downtrend. Even bad charts are bouncing no matter what you play. It's up 20, 30% in a few weeks. There's times when that happens and you're a genius. Oh, look, you tweet out a ticker and you look back on it in a couple of weeks and, oh, wow, you're so smart. Well, that's because everything is going up and bull markets make geniuses. But really in bear markets is where survivors are made, and you need to be a survivor. You need to be somebody who manages the risk, somebody who is disciplined and is selective with their trades. And in a bear market, you're shorting downtrends that bounce, and you're selectively only playing the strongest charts, the bull charts, and you're still buying dips in those uptrends at well-defined levels. So bear markets make survivors, and it's important to kind of know what market you're in. And if you're in a bull market and you look around and everyone's a genius, be careful. Be careful overestimating your abilities. Be careful getting too overconfident, because that will get you in trouble. All right, week 3 Sunday. This is key. And I'm in my trading journal book. I'm writing about this. I'm writing about many of these topics. But if you enter a trade Sunday rather, if you enter a trade thinking that you're going to lose money, chances are you're going to lose money. Be mindful of your mood and confidence level. If you're unable to visualize success, then sit it out. If you're on, this will happen especially after, when you're on a streak of bad trades. So if you open up that trade and you're immediately doubting yourself and you're thinking, I'm going to screw this up, like get out of the trade. Don't even wait. You need to enter a trade, and how do you even know? Well, if you're not being mindful, you'll never know. When you're entering, you should be journaling, number one, minimally. And even if not, you should be at least stopping and asking yourself and thinking about how am I feeling right now, and try to observe your behavior. There's some really important cues and really important information in your behavior. Are you excited? Are you scared? Are you confident? Hopefully you're confident. So if you're thinking you're going to lose money, you're going to screw it up somehow. It's going to become a self-fulfilling prophecy. So if you enter that trade and you're unable to visualize success, get out, right? Don't continue in a pattern of self-pity and self-fulfilling failure. You need to really be careful. And if you don't have confidence, you don't have anything, okay? That's week 3. Here's week 4, and we're doing week 3 and 4 today. I'm going to do the whole book for free. I hope you are enjoying this. Leave me a comment. Make sure you're subscribed. Monday. This is trading quotes as well. This is my book. I didn't show you yet, so let me pull it up here in just another screen. 1 second. I want to make sure I have this here for you folks. All right, so let's go here. Let's go there. This is trading quotes. So we're doing week 3 and 4. This is my book I published in 2022. Let's continue on. So week 4, Monday. How does a chart become overbought? A bullish trend. You want to be long something bullish as trends tend to continue. This is one we'll definitely look at the chart on, but let me read it again. How does a chart become overbought? You hear it all the time. It's oversold. It's overbought. What does it mean? It means RSI. You want to be long something bullish as trends tend to continue. So, for example, I've been looking at Mantra and talking a lot about Mantra. It's been one of the strongest charts. You could be watching this video in a year, and it could be terrible. It could be great. Who knows? It doesn't really matter to me right now for the purposes of this lesson. So let's go to like the weekly chart, okay? Look at this. So weekly chart, which is a high time frame, okay? And we're seeing this price move on OM, descending trend line break, over lower high break, aka 2-level filter. RSI here is overbought. Oh no, I should sell, right? It's above 70. Overbought means RSI over 70, but there's a couple important concepts for you to know, okay? Again, how does a chart become overbought? A bullish trend, okay? The only way to become overbought is to be bullish first, right? Number one. Number two, most trends continue. Like most reversals fail. Like trends tend to continue. The reversal is an underdog, and sure, will happen at some point, and then it's a question of the texture of the consolidation and all that stuff. And that's a more nuanced lesson. Can be gone into in my other videos. But the biggest price gains actually happen when you're overbought. So if you had sold here when this weekly candle closed and it was overbought, and you missed the move from 3 cents all the way up to almost $1 before a minor cool off, nice hidden bullish divergence, lower lows RSI, and then another move with the RSI quote unquote overbought. It's continuing to rise because it's a strong trend. So you're actually better off buying overbought than selling, okay? And the same with the oversold. Oversold's bearish. Like the biggest price drops come when the RSI drops below 30. And in my early trading careers, a lot of new traders do this. Most new traders and many veterans that I see misuse RSI, and they say, okay, it's RSI's below 30, I'm going to buy. That's a mistake. All right. You buy when price, recaptures lost support, that type of thing. But the only way to become overbought is a bullish trend, right? And you want to be long something that's bullish. Trends tend to continue. It's a very important lesson. Tuesday, if your trading system is not working, it's probably too complicated, right? You're probably using too many indicators. I use pretty much the price with some moving averages. You can argue that I have too many moving averages. Okay, I think it works just great. Watch the masterclass webinar. But I don't really even use OBV and RSI anymore, right? Momentum indicators, index indicators like OBV measuring buy and sell volume, and RSI measuring relative strength of itself, average gains versus average loss. You don't really even need these oscillators. But I see people using like RSI with stochastics RSI with MACD. I mean, that's insanity. Those are things basically all doing the same thing. I see people using, accumulation, distribution, and OBV, things that do the same thing. You pretty much should never, you really don't need these oscillators. Like people end up selling based on divergences before the price has done anything. You have to let the price lead. You're better off minimizing things, okay? You're better off minimizing things. Don't draw too many lines. Draw the most obvious level on the chart. And if your system is not working, it's probably too complicated. You can do really well just following the price, okay? Following the price in relation to the MA200 is an uptrend. If it's price above a rising MA200, it's an uptrend. If it's price below, it's a downtrend. I'm going to ignore it. Where's price in relation to, to prior major levels, right? You just kind of follow the price, draw the most obvious level in the chart, and simplify your approach. I recommend removing MACD, RSI. You don't need those things, okay? Once you get a little bit more advanced, maybe you can add them back when you actually understand how to use them. But most traders, when they start out, are using way too many indicators, and they're actually trading from the indicator. Remember, the trading idea comes from the price, not the indicator, okay? So this is good. This is a big one that I've talked about, and I see people still making this mistake all the time. Wednesday, the purpose of a trend line is to identify a trend, not a line. What does that mean? Cheds, what does that mean, Cheds? Is this wordplay? The purpose of a trend line is to identify a trend, okay? What does that mean? Okay, I'll tell you what that means, all right? So here on like Bitcoin, I was looking at it in the 4-hour, okay? And so what you can see here is you very roughly have a trend of falling lows, okay? And you can get all sorts of hung up about how to draw this line. Do I draw it at this wick? Or am I supposed to draw it at this body here? If I draw it here, do I do it like that? But what about this wick? What about that one? It's not about the line, okay? It's about the trend. The whole point of a trend line, it's identifying there's a filter around it of price. You're identifying a general trend, in this case, of falling supply. It's a trend of lower highs. It's a trend of more anxious sellers, right? Look and see when that trend breaks, some kind of a confirmation level, 2-level filter, for example. But people get so hung up and they argue and they debate, they don't know what they're talking about. It's not about the line. You're not trading a trend line. It doesn't really exist. You don't trade in the line. It's an actual trend. So you're trying to use the line to identify the trend. And most of the time, you don't even need the line because you can see it, right? You can see it visually most of the time, right? I can see here on Ethereum. Do I really need to draw this? Do I really need a trend line to draw this for me, right? Right? Do I need that? Oh, Chet, no. It's this way, and then it's this, and so it's broken. No, it doesn't matter. Doesn't matter. Here's your trend. The whole point of the line is to identify the trend, not the line, right? It's not about the line, it's about the trend, okay? Thursday, leave no stone unturned in your quest to become a successful trader. Your mileage may vary based on how seriously you take this challenge. And I speak from experience. You have to work really hard. It's not going to come easy to you. You're not going to have people feed you trades. If they're feeding you trades, sometimes they're good, sometimes they're bad. And you're not even able to manage them properly, right? You have to put in a lot of time. You need to trade with money. You need to make mistakes and learn from the mistakes. You need to journal them. You need to read textbooks, read classical charting textbook, read a Japanese candlestick textbook, watch my masterclass webinar. You should not be trading if you have not watched my free masterclass webinar on YouTube, right? It's ridiculous if you're going to trade and you haven't watched this, okay? Your mileage may vary, which basically means if the person who works hard is going to do better than the person who doesn't work hard. And if you want to become a successful trader, leave no stone unturned. You may or may not have heard that phrase. It basically means look everywhere, keep trying. This means like just try as hard as you can. Okay, you have to put in hard work, and this is me encouraging you to put in hard work. This is hard, right? Like, so if you're a trader, it's your money. Friday, the discipline required to tell yourself no is the strongest predictor of a trader's success. It's a whole idea of delayed gratification. In psychology, delayed gratification being a predictor of success for people. Like if you can put off gratification, if you can control your impulse. So the discipline required to tell yourself no. You're sitting around, you're bored, and somebody tweets out a ticker. Oh, I have FOMO. I'm going to try that. No. Tell yourself no. You have to have the discipline to tell yourself no. You're your own boss if you're trying to be a trader. Tell yourself no. Wait for a real opportunity, one that you found from a chart you've been studying where price is interacting with a key level, where you have a genuine opportunity, where you're oriented properly with the trend in classical charting. You're buying a dip in an uptrend, you're selling a rip in a downtrend. And if you don't have the discipline to tell yourself no, it's not going to work out. So if you have the discipline to tell yourself no, that's a pretty good predictor of your success. Okay? This one's fun. Saturday, I have a lot of fun with these quotes. And by the way, these are all my original quotes. These are quotes from my wisdom tweets I put out on Twitter for the last 10 or 11 years, from my experience trading, things I've experienced, and finding ways to communicate them in an effective way. So Saturday, if you find yourself itching to call the bottom, what does that mean, itching to call the bottom? It means you're just like, oh, this is the bottom. No, this is the bottom, right? And I'll show you in a moment an example. If you find yourself itching to call the bottom, you may instead be scratching your head later and wondering where all your funds went. And this is me being fun, playful. You're itching, now you're scratching, right? Scratching your head, like what happened, okay? If you're itching, people are itching to call the bottom in Ethereum versus Bitcoin. I mean, this is a pretty nasty, steady downtrend here in the daily. It's 4 hour, but daily, look at this thing. So people have called bottom, right, for the last couple of years, and every little bounce against the trend, right? This is a bounce against the trend, right? Bounce against the trend, bounce against the trend. And people are calling bottom. They're itching to call bottom. Just wait for the price to confirm some real turnaround. In this case would be 0.04. Wait for something, right? The best trends will take time to slow down. Red light to orange to green. It's not just going to go like that most of the time. And you don't want to be just buying these little movements against the trend. Wait for the trend to turn around. If you're calling bottom on every little mean reversion against the trend, what's going to happen? You're going to find yourself scratching your head later and wondering what happened. Why did I lose all my money? I was guessing that every little bounce in this bad chart was the bottom. Stop doing that. It's not what you want to do. You don't want to be trying to play a reversal chart. You're going to lose all your money. If you want to go long, find an uptrend that is dipping to support. Here's the opposite. How does a chart become overbought? How does a chart become oversold? A bearish trend. You want to be short something bearish as trends tend to continue. RSI just dropped below 30. That's not a buy signal. That's a sell signal. Okay? You need to fix these things. You need to understand that trends tend to continue. And the only way to become oversold is to be bearish. This is weeks 3 and 4. I'm doing this whole book for free. I'll do week 5 and 6 next. I did 1 and 2 last time. This is Trading Quotes, a daily dose of trading wisdom. I published this book in December of 2022. I do have a brand new book coming out, The Trading Journal, Trading Wisdom Part 2. That should be out in the next couple of months. So since I have a new book coming out, I wanted to make a free version of this book. You've already got a free version of Trading Wisdom. The first 18 lessons are free. And then the entire Cancer memoir is free. My books are also available on Amazon if you want to buy them. And I have audiobooks that I've recorded with my lovely voice. Thank you. Thank you. Available on Audible as well, and Kindle, actually, for all of these. So I'm really excited for all the stuff I have coming out for you. I do live stream 3 days a week and goes into quick market updates. That's Tuesday, Friday, Saturday. I did mention, of course, Founding Analyst, Bitcoin Live, the best team in the world that studies crypto. I've been doing market reports there every Wednesday and Sunday night for the last almost 7 years, and I haven't missed a video. So check that out. You know me, of course. Big Cheds from Twitter. Shoot me, say hello, shoot me a line. Let me know how you're doing, what you're thinking, how you are feeling. And thank you for being here. Thank you for sticking around while I rambled for a while and talked about my trading quote. So, folks, thank you so much. I really, really appreciate it. And I will talk to you soon. Big Cheds out.